Welcome to today's deep dive. What central banks are not telling you. This is more than just a financial headline. It's a wake-up call. Last year, an astonishing 38% of bankers reported a loss of faith in the Federal Reserve, a figure that, frankly, should alarm us all. And just recently, the U.S. Treasury Secretary candidly admitted nobody truly understands the Federal Reserve's balance sheet. The timing of all this is no accident. It's real, it's unfolding now, and it's deeply alarming. So in this video, we'll dissect what's really happening beneath the surface, why this erosion of trust matters, and how you, whether as an investor or a citizen, can navigate these uncertain waters. Central banks have long been the backbone of global financial stability. For decades, institutions like the Federal Reserve in the US, the European Central Bank, and the Bank of Japan have acted as the guardians of economic equilibrium. Their tools, adjusting interest rates, controlling inflation, regulating liquidity, are designed to keep growth steady and avoid shocks. Yet, something crucial has shifted in the past year. Interest rates have fluctuated wildly, and what was once a predictable policy environment now feels precarious. Markets, rather than stabilizing, are responding with uncertainty, and investors around the world are starting to wonder, what do central banks know that they aren't saying? So, let's focus on what's happening behind the curtain, the Federal Reserve's balance sheet. Over the past few years, the Fed undertook an unprecedented expansion of assets, buying government securities and other financial instruments to inject liquidity into the economy. But now, the Fed is attempting to reduce its balance sheet, to reverse that expansive policy. As they attempt this quantitative tightening, liquidity is being pulled back from the markets. What we're seeing is not just a technical maneuver, it's a potential liquidity crunch. And when liquidity dries up, that's when the dominoes can fall. This is not a repeat of the past for no reason. This is a real risk today. Financial experts from institutions like the Brookings Institution and the IMF are sounding alarms. When a large segment of bankers loses trust in the very institutions that stabilize economies, it signals a fragility we cannot ignore. They point to historical parallels. The stagflation era of the 1970s, when faith in central banks wavered, or the 2008 financial crisis, when opaque derivatives nearly brought down the system. Today, the opacity is even more pronounced. The public and even seasoned investors struggle to grasp what's being held in reserve, and that uncertainty is breeding fear in the market. Financial experts from institutions like the Brookings Institution and the IMF are sounding alarms. When a large segment of bankers loses trust in the very institutions that stabilize economies, it signals a fragility we cannot ignore. They point to historical parallels. The stagflation era of the 1970s, when faith in central banks wavered, or the 2008 financial crisis, when opaque derivatives nearly brought down the system. Today, the opacity is even more pronounced. The public and even seasoned investors struggle to grasp what's being held in reserve, and that uncertainty is breeding fear in the market. So, what can you do as an individual investor, or even just as a curious citizen, trying to make sense of these murky waters? First, stay informed. Don't let sensational headlines drive your decisions. Seek out reliable economic analyses and expert commentary from trusted sources like the Financial Times, IMF briefings, or academic research. Second, diversify. Don't put all your eggs in one basket. Consider safe haven assets like gold, government bonds, or even real estate in stable regions. And above all, stay calm. These are moments where rash decisions can do more harm than good. Let data, not fear, guide your actions. Thank you for joining me today as we peel back the layers on what central banks aren't telling us. If you found this perspective valuable, please subscribe and stay engaged. Together, we'll stay informed and empowered, no matter how turbulent the financial seas get. Until next time, stay sharp and stay prepared.